Okay, folks, welcome to our weekly update, PPP. We're going to get started in just a few more seconds. So take your seats, grab your cup of joe or tea or whatever else you like to drink, and make yourself comfortable. All right, so this is July 23rd, 2020. As you know, last week we did not meet, so we are meeting this week to give you a weekly update on preparing for COVID-19 recovery, loan options, and forgiveness strategies. And this is presented to you or powered by SACS, Accounting Tax Advisory Services, SACS Wealth Advisors, and S2 Solutions, the newest addition to our family, our technology solution group. So folks, here is our slide where we are basically telling you that we're doing all this wonderful stuff, providing general guidance only, and it doesn't constitute the provision of legal, tax, accounting, investment, or any other professional advice. Therefore, it's not a substitute for your consultation with professional tax, accounting, legal, or other competent advisors. Go speak to those folks, and we are here for any questions that you may have. And yes, this is our recovery task force. We did use our real pictures, although my picture is definitely outdated at this point. But myself, Todd Polinak, Josh, and Stephen are all here as part of a recovery task force. Today's agenda. All right, so this is not going to be a long one, guys. As you know, we're waiting for some additional information, but we have some things that we wanted to update you on, talking about the loan application, the EIDL advance. Going to give you some updates concerning Capitol Hill, and also the Main Street lending program for not-for-profit organizations. Some things that we want to recap again are the PPP loan forgiveness, forgiveness application timing, and FTE Rehire Exemptions, and then also wonderful open questions. So with that, I'm going to turn the next section of updates to my friend Steve, who's going to say, well, Steve, what's new? Tell us.
All right, thanks, Todd. Good morning, everyone. I hope everyone's doing well out there. A couple of reminders, and then we'll go over some updates as it relates to coronavirus bills and any new information there. But as we've said on the past few webinars, on July 4th, President Trump signed a bill to extend the loan application date to August 8th, 2020. So there is still time to apply for PPP funding for borrowers who are still looking to get access. As you can see, there's still over $130 billion in funding that's still available. So if you're out there listening and you want to apply, we definitely recommend that you do so. The SBA at this website here has a lender match tool. So if you can't find a bank that's participating in your area, you can click on this link or enter this link into your browser, and you should be able to find a lender that hopefully can meet your needs. As far as the EIDL, the loan application above, that's the PPP. As far as the EIDL, just want to let you know that the SBA announced that the advance program, the $10,000 advance, is no longer available. That was based upon number of employees. So if you had at least 10 employees, $1,000 per employee, get up to $10,000. That would essentially be forgiven, but that advance is no longer available. The EIDL itself is still available, but just note that the advance as of now is no longer available. Okay, so on to what's happening now. There are negotiations. If you've been reading or reading the news or looking on the various news outlets, we've seen that the Senate has begun negotiations for the next coronavirus bill. The July 31st ending of the $600 expanded unemployment benefit is seen as a real impetus here to hopefully get something passed. Depending upon what you read, we see that they're trying to reach a deal before the congressional recess, so that would mean that the deal was struck this month. We'll see if that happens, but there is bipartisan support for some sort of PPP 2.0. And what that entails, we'll see, but our understanding is that it will be some sort of skinny down version of the original program, whereby borrowers will have to show some sort of reduction in revenue or actually show more financial data as to why they need the funding. And we'll see what the other terms are, but at least that's what we're hearing now. So as I said, there is pressure to reach a deal. They want, both sides of the aisle, frankly, bipartisan support to try to get something done. But we've seen there are competing priorities spending wise, but also just what they want included in a bill. We saw back in May, the House of Representatives passed the HEROES Act, and we've listed some of the items that are of top of mind for the for the House in terms of this act: unemployment, stimulus payments, increasing the employee retention credit, essential worker aid and community assistance, state and local aid, helping out state and local governments, increased testing, health coverage, food service. There's the state and local tax deduction. So there really are a number of items that were included in the HEROES Act. We'll see once the negotiations really start in earnest, now that the Senate has begun their discussions, and you'll see there is some repeat information here. Liability protection has been a big area that we've heard Senator McConnell talk about, whereby businesses would be protected from opening, schools too. But we see here that the Senate also is focused on unemployment, direct payments in the form of stimulus, tax credits and business incentives, and we're going to see one on the next slide. But education and safe opening, testing and cleaning, personal protective equipment. We've seen a lot of back and forth from the Senate, frankly, in terms of unemployment. Is the increase, the $600 expanded unemployment benefit, is that actually a de-inhibiting factor or for people to want to return to work because they get this expanded unemployment benefit? So there's discussion about that as to will there be a way to kind of reward people for going back to work. And we've seen the president constantly mention payroll tax cuts. So this is something that is front of his mind, and he's even said he may veto any bill that doesn't include this, but the payroll tax cut hasn't really received a lot of support on either side of the aisle, frankly, because they're concerned that people are out of a job. So how much does it help cutting payroll taxes when these people aren't working to begin with? So a lot of back and forth. We saw today that the Senate said they may issue a series of bills that forms an act. So we'll really have to see, but we're thinking that they're going to try to get this to come together fairly quickly. So definitely stay tuned. And as I was saying, there is competing spending priorities. We saw the HEROES Act have funding in excess of $3 trillion, at least that was planned for. Nothing's been passed, but the Senate is thinking more on the $1 trillion range. So a $2 trillion delta there, difference, is a big leap to hurdle, but we'll see what happens. So definitely we'll be paying attention and we'll update you, but just wanted to give you a brief update as to what's happening at Capitol Hill, but also letting you know specifically that the Senate and the House introduced some legislation to provide businesses with a refundable tax credit against payroll taxes. So we're seeing here a lot of different priorities, a lot of different information that comes out, but there is a potential to reduce payroll taxes if this bill is indeed passed for certain costs that were incurred by businesses that are trying to battle this COVID-19 pandemic. And lastly, just as a side note, the tax deduction for PPP fund expenses, that's starting to receive some more press and just some more attention as well by both sides. There is bipartisan support to allow it and to not allow it. As we know now, the funding, at least from the federal side, it's not included in income, but you're not allowed a deduction for it either. So there is some discussion that there may be deductions available for this. So that's something to pay attention to. We'll see. That would obviously be a nice benefit for borrowers. So that's something we're going to be paying attention to as well. Okay, so those are the updates. Now we just want to briefly go over the Main Street Lending Program for non-for-profits, only because just earlier this week, or actually that was last week, the two new loan facilities for nonprofits were finalized. So just as a brief background, the Main Street Lending Program is a non-forgivable program in that a non-forgivable loan program, I should say, intended to provide loans, credit for small and medium-sized businesses that were in sound condition prior to the outbreak until conditions normalize. It's a $600 billion program, and there's programs for-profit businesses, but nonprofits were initially left out of this. But on July 17th, after the close of the comment period, the two new loan facilities for nonprofits were finalized. It's the new loan facility and the expanded loan facility, and we're going to go through again just what some of the terms are. It's a similar program in terms of participation by the Fed and what they retain, and as far as the Treasury. So it's similar to the for-profit program in terms of when it will start, when it's set to close and whatnot. So keep that in mind as well. So we have on this next slide just some of the requirements and conditions, and some of these have changed since the initial term sheets came out. So still have to have been in continuous operations since January of 2015. You have to have a 2% or greater ratio of adjusted 2019 earnings before interest, depreciation, amortization to unrestricted 2019 operating revenue that was 5% in the earlier version. So they have reduced that. At the time of origination, the ratio of liquid assets to average daily expenses has to be equal to or greater than 60 days. It was 90 days. And the ratio of unrestricted cash investments to the existing outstanding and undrawn available debt and these other debt items can't be greater than, or has to be greater than 55%. It was 65%. Also cannot participate in other Main Street programs or these other credit facilities as well, and cannot have received support under the Coronavirus Economic Stabilization Act of 2020. And just to be clear, this is the PPP and the EIDL are under separate programs. So PPP and EIDL recipients are still eligible to get Main Street Fund. Some other conditions and requirements: the lenders will be conducting an assessment of the borrower's financial condition. So they're going to be looking at your balance sheet, your financial statements, income statement, and you're going to have to be in sound financial condition prior to the onset of the outbreak. So it's something to keep in mind as well. And borrowers are required to make efforts to maintain payroll, retain employees, and the lender and borrower certifications, covenant, and restrictions, those haven't really changed, in that you're basically not going to be able to use these funds to repay debt or pay off lines of credit. I mean, they want you to use these funds to maintain your payroll, not to condense your balance sheet or try to pay off loans at a higher interest rate. And the compensation, stock repurchase, and capital distribution restrictions still apply, and you have to be eligible to participate in light of the conflict of interest prohibitions. Also, just know there's fees associated with it. There's a transaction fee that the lender pays to the special purpose vehicle that the lender's allowed to pass this on to the borrower. So in reality, that's most likely going to be passed on to the borrower. There's also an origination fee we see here, which is different between the original, the new loan and the existing loan facility. And then there's a servicing fee. So there's these fees on top of the interest that you will be paying as well. So you're going to want to keep that in mind. Here is just a chart. It's right off of the press release that came out from the Fed, but just talking about some of the different items. The term is 5 years. There are minimum and maximum loan sizes. Entity types for those of you in 501c3s or 501c19s. They reduced the employee minimum. It was 50. Now it's 10. So anywhere between 10 and 15,000 employees. Here's the revenue cap and source requirement. It was 30%. Now it's 40. Endowment cap. You get to defer payment for 2 years, although interest is only deferred for 1. And the businesses must be created or organized in the U.S. or have a majority of employees in the U.S. So just something to keep in mind as well. So now I'm going to turn the program over to Todd, and he's going to talk about some loan forgiveness options. Todd?
Thanks, Steve. So we're going to talk about two things. I'm going to talk a little bit about the forgiveness application timing, and then I'm going to, after that, turn it over to Josh to talk about FTEs, because we find that these areas are repeated questions that we're getting, and obviously we have some answers and we have some we have some that there is no answer for yet. But we get a lot of questions about when should I apply for loan forgiveness? And I think that with some exceptions to the rule, we're saying to folks, don't rush to apply. So why should you wait to apply? Well, first, the rules are still changing. You know, we had that urban legend about the 25 to 30 FAQs coming out on a Thursday or Friday. I kind of joked that I didn't know which month or year that the SBA was talking about, but still, we don't know. There's been multiple versions of the forgiveness application released, and there could still be more. Will seasonal employers use a different application? We don't know. Can I use the 3508 EZ form? No, this is one situation where we feel that if you really can use the EZ form, then maybe you should apply sooner than later. Will the lenders have their own application? We believe that lenders, since they're going to be given the option of having their own forgiveness application, that they probably should, you should be aware of the fact that you may get something different than what you expect. 24-week covered period. Borrowers have more time to spend the funds. And timing to apply for forgiveness, as you know, you're allowed to wait 10 months after the end of the covered period before applying. This is a change in the rules. So if you have 10 months to apply, folks, and you're now in a 24 covered week, why should you apply right now? Financial statement and tax implications are you're going to be impacted both in your financial statement presentations and your tax return, depending on when you apply for forgiveness. So you need to consider that as another thought. And also data access. We are seeing that third-party reports and templates are coming out. We heard of some that the AICPA is promoting, different companies are promoting. So there will be an opportunity for folks to utilize those. And then I guess the question that everyone is asking, at least I'm asking, who wants to be the guinea pig for the SBA? You first. So turning this over now to Josh, because we get a lot of questions, right, Josh, about the FTE rehire exemption. So take it away, Josh.
Hey, thanks, Todd. Yeah, I think this is the area where there tends to be the most confusion. A lot of people have sent us their interim calculations. They want to know where they stand. And like I said, this is really the area where I'm finding that people get things either wrong the most, don't understand. So we just wanted to kind of re-highlight again the different components to the FTE rehire piece. And look, internally, everyone's situation is different, but you certainly may fall into one of these categories. So the first one is, if you remember all the way back to the original rule, it had said that if you had terminated an employee between February 15th and April 26th, 2020, you originally had until June 30th to bring them back. We know June 30th, obviously, at this point is no longer a valid date, and that date has since been pushed back to December 31st. The million-dollar question, though, is that what happens if I apply before this date? Do I have to, so if I want to, I've spent my money 10 weeks, 14 weeks, I may or may not have brought the employees back. Do I wait until December 31st to apply? I think this is going to be one of the main areas, hopefully, that's addressed with the information in the near future. Also, too, if we terminated people and we tried to rehire them, and they didn't, and they didn't want to come back, remember, we want to document that we did provide a written offer to these people if they declined, if we were unable to rehire, a similarly qualified person by December 31st, or again making a good faith written offer to restore the reduction in hours at the same salary or wages, but the offer is rejected, right? Maybe we offered the people a reduction for the time being and they left, or they wanted to stay on unemployment because it was a more lucrative offer to them. So that also has certain implications, remember, with unemployment and what's required to be reported. So again, if you did terminate or furlough employees, make sure that was, and you did attempt to bring them back, that you do have that documented. And then also too, so if you have employees who were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours, and the position was not filled by a new employee, that does not hurt you as well. Again, just make sure that you have documented in the employee's files, or you keep a spreadsheet of your employee activity, that this is why those folks are no longer there. And I would expect that as if the application continues to morph itself, as we do believe, that there'll be additional questions there related to this information. And finally, and we've spoken about this at length, and I think it's a very important, and this may be in some cases your strongest case, is the COVID-19 explanation, and that is if you were unable to operate between February 15, 2020 and the end of the covered period at the same level of business activity as before February 15, 2020, due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by the Secretary of Health, all these other great places, again, related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement, it's an out, right? So if your business is down, does that support a reduction in headcount? I would say yes. And also too, if your headcount is down because the way that your business is set up is that you can't follow these guidelines, that's also another reason for a reduced headcount. So again, in some cases, this may be your strongest position to take, but again, it's another one to consider. So like we've said, there's been a lot of employee movement. You've got to consider each one of these pieces as it affects your FTE reduction, because in some cases we've seen some loan calculations where the FTE reductions are very significant, and folks are winding up with 20% of the loan that's not forgiven, 50% of the loan that's not forgiven. So going back to the points that Todd was making before, unless you're very, very confident in the information that you're going to put forward on a forgiveness application, it's very important to wait and look through all the opportunities, all the exemptions, and making sure that you're doing the most you can to make sure that these loans are forgiven. So just wanted to touch base again. These are really still the main open questions that we have, that we're hoping will be addressed. There's nothing new here. Steve touched on before a hot issue about the tax treatment. And even to double down again on what Todd said before, a lot of people and a lot of banks are very interested in the financial statement presentation and the tax implications of this, right? We have a lot of banks now asking for mid-year financials. In some cases, the loan proceeds have already been spent. And before you know it, you blink of an eye, we're going to be doing tax planning again, for the end of the year. So that is weighing a lot on people's minds, and I think they want an answer, before the end of the year, so that they know how to plan accordingly. So these open questions will be on our website as part of the presentation. We don't have to go through them again, but they are certainly here for you to review. And again, as you fill out your own spreadsheets and your own calculations, these are things that you still want to keep in the back of your mind. So with that being said, Todd mentioned at the onset, there's not a lot of new information. At this point, we're planning on not having a webinar next Thursday unless something really, really big comes out. However, as information does continue to trickle out, we're going to, continue to put out our e-blasts and our emails. So please make sure that you are signed up to receive those. Please continue to submit your questions to COVID-19 at sacsllp.com. A lot of those questions we use for our webinar content, and also to, your question may be the same question that many other people are having as well. So we want to make sure that we continue to address those. And we'll be in touch soon again with our next webinar. And everybody be safe, and thank you for listening. Take care.